The S&P 500, the Nasdaq 100 we're talking about today. Now, fundamentally, I can go over some things that were said from Fed Kashikari, but I find that a little bit irrelevant right now. Most of the things he said were not good. They were pretty unbeneficial. If you want, you can go follow and look at our comments on Twitter. Go check out there. So they're there. I post them there. However, we have a very interesting day. So we talk about this 426 level, and we talk about where we're at now. Now, I do want to highlight before we jump into this is that I did say this morning based on Twitter, I said ES hitting the 200 daily moving average, the NQ hitting 14,600s, both major supports. Expect buyers to try to step in at this point. DXY continues ripping. Oil breaking over 92. We need to talk big about oil. And I do expect some upside at the very minimum. The first 2 hours of trading, wouldn't be surprised to see a green day at the end of the day. We look at the action, very interesting. We ended the day like right at like the pivot point for being green. We had some really nice buying near the end of the day. However, I will say on that area, this is interesting, and we saw more selling than I anticipated. You know, you go like to the 5 minute and you look at the action for most of the day. You know, that initial gap up, and the rest of the day from essentially 840 into around 115, 130, it's just straight down, right? Some immediate buying happening there. Now, in my opinion, when you're seeing these bottoms potentially being put in, you want to see volume. You want to see indication of a reversal. And I don't know if we are getting that yet. But tomorrow we have some pretty big news that I do believe will push volume to the market. We're going to talk about that here in a second. I do that to ask you to do 2 things. Consider liking and subscribing. It helps out the channel tons. I appreciate all love and support. Every single day we post a video about the market, what's happening, stocks we're liking, equities in the market, and ultimately what to expect going into the next day. The Discord link is also down below if you are interested. But again, we provide a lot of free information as far as education. It's all there for free. The newsletter, I recommend following, subscribing to the newsletter. Every single week this goes out, giving you all the key levels to watch on indexes, specifically futures, and a few equities as well. It's all there for free, as well as education on YouTube as well. So we don't really sell a course. But if you want hand-holding, understand how, why we're trading, what Discord is doing, the community as well, all throughout the day, maybe it's for you. Check it out. So again, let's talk about where we're at, how we're moving. Now, the biggest thing that I was watching was this 426, which we mentioned. It was a previous demand. I saw also, and I want to clarify this just real quick. So someone in Discord even called this out. So, and there's no harm, no foul. I just want to clarify so everyone knows. So if this is your demand, right? You expect buyers to show up here. Now you broke down below. This is no longer a demand. Based on supply and demand, that is gone. Right. Now I still think 426, 425.8 is a key level, something to watch. You know, buyers try to show up here, and it's obvious they did. We held that level. But that demand is no longer of importance, more of just the key levels of where we're at now. So when we zoom back in, you get a little bit better of a visual, and you know, this is ultimately what I'm looking at now. You know, we did have that pretty much perfect bounce and retest going into there, and then as well as right here from today. There's previous lows, things that I'm always looking at, previous low, previous low. You're coming in, rejecting, pushing, pushed up, reject, push down. So from the narrative of a bullish day, I don't think it was that great. I'm going to tell you that right now. You know, we look at, you know, Nasdaq in particular, you are finding buyers down here in this zone we've been talking about, right? As you can see, buyers stepping up in the zone. However, you still are not above 14,798, 14,8 flat, right? You're still rejecting there. You're still under that level. But buyers did show up. So you're in a little bit of a sticky area when it comes to trying to guess where we're going. Now, again, understand there's a few things that are leading to tomorrow that I'm highly concerned about. I want to talk about one more thing before we do that. I just don't want to forget the Russell. We look at the Russell, right? Pretty much perfect head and shoulders. We can look at some of the indicators as well. You know, you had the daily 200 and the weekly 200, all of which you've cracked back below. That's very concerning. You're back down almost in the middle of that range. This is really a little bit lower based on futures rolling over, but you're still back in this range. So again, very weak behavior on the Russell, which is a risk on, risk off mentality. So when Russell is down, you definitely think people are, you know, stepping back as far as risk is concerned, which points us to the narrative of what we're seeing from tech and the pretty decent size sell-off that we are seeing. The last thing I do want to cover here is going to be VIX. So as you see here as well, you know, we had that touch of 20. We wanted to see us to get above 20. If you're bearish, you want to see a hold above 20 and then hopefully 24. You did reject off that. So again, kind of just stuck in the middle of no man's land. But tomorrow, the biggest things that we're looking out for. Okay. So at open, you are going to have your GDP information coming out. Pretty big expectations. We're seeing a lot of adjustments to the downside and slower growth coming out. Would not surprise me to see that come out lower than expected. Pending home sales, I believe those are going to continue to slow down to the end of the year. Personal opinion, and based on where rates are, you know, 7 weeks consecutive at 7%. Interest loan rates, pretty bad. You go a little bit deeper, then you have Powell speaking somewhere near the end of the day. I believe it's like 4 o'clock. But it's important to understand that it's 3 p.m. right at market close. It's important to know that he might just be hosting these. And like you see the schedule come out and everyone jumps to this idea that Powell's giving a big speech. I wouldn't play all that. I definitely think the more important news will come out early in the morning. I also don't think the Fed will have anything good to say when they do come out. We saw Kashkari say a lot of negative and bad things on the day. So I don't think the tone there is going to switch because nothing's really changed there. Now, when we look at some of the areas that are hurting the market, right, and that have switched the Fed's tone, right, I think that's a big narrative we need to be paying attention to. The dollar, DXY, continues to churn to the upside. People keep commenting the dollar's going to weaken. Well, you broke above March highs. You broke above, every high of this year so far. So we're going back into 2022. You're pushing into this 107, 108 range. It's getting pretty ugly there. The dollar's going berserk. It's not a good note, not a good narrative to be following. A little bit deeper of a view, you zoom out, you go to something like the yields. Now, we saw the 2-year. And again, I want to highlight and go back to things that we talked about in previous videos to give you that education and understanding of why I'm looking at these things. So in the previous videos, I've had a pretty big, I've been watching the 10 and 30 a lot more as of the past few days because they're just moving so bullishly. You're breaking out clear highs. Remember, was our major bottom put in of last year, October, 2022. We're breaking above that. We're pushing up really nice. The 10-year pushing up, the 30-year also pushing up very nicely, right? Very, very nice. We mentioned this. We called this out. We called out why we assumed this would happen, what was happening here. Really quickly, you jump back into, let's go to the weekly so you can see where you're at and kind of the significance of these levels. The 30-year, you're back at highs from 2011 through 2009. You're probably going to break out of this range and push into 2007 highs, most likely 5.3%. It seems very, very likely, but I will say this is a bit of a resistance here. If you go straight through this, it'd be very bearish for the economy. The 10-year yield, and I do believe tomorrow and Friday have a big impact because PCE data is on Friday. So we look at the US 10-year, you're pushing already above those 2009, 2011 levels, which this shows that this is actually a worse time, in my opinion, than it was back then because your 30-year is really still backtracking and still trying to play catch up to the 10, 5, and 2-year yields, right? And so you can still see the 10-year is already, damn near at 2007 levels, pushing up to the 2007, 2006 highs. We go up a little bit more. You see the 5, you zoom out, you're very close. We go to the 2-year, and then obviously you see the really steep decline we had back in 2007. But look, you're still just moving up very bullishly. This is the longest area of continuation that we've seen, especially with holding up through these drops, right? Usually when it starts to drop, it gets ugly. It drops quick. So not a good narrative. Now, the icing on the cake when it comes to data, because you're all wondering, Tyler, how do you feel about data? How do you feel about where we're going? How do we feel about the market in general? Now, again, I've been tracking oil for a while now. I've been trying to give you guys a visual, why I like certain things, why I see us going certain places. Now, we can see that first level that we were watching, back at 84, 85. Go watch the YouTube videos. We talked about this. And you can see we pushed into this area. We rejected, bull flagged. We held the 200 SMA on the daily. It broke back up, and we're pushing back into 93, 94. Now, the biggest thing that I'm talking about here, and that kind of concern me, my throat's killing me, that I'm watching here is that you're pushing up and there's no real rejection here. This is pretty concerning. So I would want to see some sort of rejection. If you go to something like the daily, there's a little bit of one. You can kind of see it there. But buyers are showing up so strong. In my opinion, 94, it's kind of tough here. It's a little bit of a resistance. But I'd be putting my money on us going to 98 to 100. And inevitably, this will keep hurting our inflation data numbers. What's the one constant that we've been saying over the past year is when do we think data will get bad? When do we think inflation will become a problem again? Because it hasn't gone anywhere based on those data readings. It was when oil started to spike again. Since oil started spiking back, early July, this has become a big issue. And we're seeing OPEC and everything else align with this, continuing to push this up. So it's not so much of like potential dead cat here. It's just really bad overall movement and a behavior here. So we look at something you can see, which we've talked about a lot. You can clearly see the 200 SMA on the weekly, the 200 weekly SMA right there. You held 1, 2, 3, 4, 5. I mean, you can count more right there, but you bounced, you held, you broke back up. So again, a lot of buyers stepping back in. I think the narrative of pushing to 100 or at least 98 is there. I would not be shocked to see continuation, and this will continue to hurt data readings. going back into Powell, this is kind of where everything kind of ties back into. If you're looking at Powell, what he's going to say, again, he's already painted the narrative that he has no control over a soft landing. We've seen the Fed shift further and further away from said soft landing. Pretty bad news. Not what you want to see. If anything, it's more concerning now based on where the dollar's at, where yields are at, and where oil is continuing to go to. Also based on what's happening with the workforce, I think jobless numbers also are going to be very interesting. Again, home numbers could also start to paint a pretty ugly picture as well, and they've really helped us continue on the upward path if we look over the past year. So these are all data readings we need to be paying attention to. I'm not convinced with this balance that we had today. SPY is above 426 in the after hours. I believe we're like at 426.78. Decent bounce. But all in all, I think there's a few names that are holding up, primarily semiconductors. We haven't seen sellers step in yet on semis. Giving you a visual, SMH, semiconductor ETF. I mean, this is absolutely disgusting. You're seeing this clear level, head and shoulders you broke below, the neckline right here. You're just sitting below it. I mean, this looks ready to absolutely get shot down to 135, 134 roughly. Again, so a whole sector has been really held up. Going to say it right now. We look at other big names, some of the biggest names in the market, Apple, leading name, probably in the S&P. I mean, you're sitting damn near below 170. Those puts are almost deep in the money. That's pretty awesome. So again, we're looking at major levels breaking. This is not something that you would like to see. You are seeing support, come in where it needs to come in at. But I mean, you break and hold below 170.4, it's pretty ugly, and it just looks likely. So these are things that I'm watching, what I'm watching in the market, and overall just how I'm interpreting it. I'm not overly bearish here. I do recognize we're at a major support, but I'm looking at the data that's coming out. I'm looking at the data that we can see as far as oil prices, what's happening with the market, and how things aren't going to get better after 3 days. So that's my personal opinion. The Fed hasn't said anything good. It would shock me if they did say anything good, but I will be paying attention. I will be seeing tomorrow's video. Hopefully have a few more directional plays and more equities I'm liking as far as to the down or to the upside. Have a good one, traders.